Well, welcome to our little ditty about the safety net in the heartland for families try to keep it together, and the things that can happen to really destroy a family under basically the system we had for so many years, where you get your health insurance, at work, and then, well, I'll tell you what, there's plenty that can happen now as a review. Uh, uh, Harry and Lucy, or Harriet and Lou, or whatever you want to call them, our favorite couple, very optimistic. But then well, our hero, he got involved pushing those subprime loans, and yeah, the lady, she was really into the physical fitness, and she had an accident while she was out on her bike, and again, our boy at work, he started eating junk food, uh, and at any rate, he couldn't keep up with all the stress and the nonsense things going on at work. He ended up having a heart attack. Now, by the way, if you'd like to see more, right there, Fred 428 CJ6, please comment, and we'll just continue on. And again, I mentioned I'm a political junkie, been blessed with the right to vote, and as such, I have a duty to make informed choices, to engage in the debate that is part of any representative democracy. We'll continue on. Now, it's also a long time ago. Of course, this is outdated. Really, the year is 2024. But we know that there's going to be changes in consumer demand in a changing world, globalized world. There's going to be a lot of factors that are going to affect what kind of jobs are available, and worthwhile. Now, this is an interesting item here. According to the U.S. Department of Labor, and you can see the years that are involved, and it ain't so much the year as it is really the continuing trend, is we can see, so 10 of us were working. See, these are percentages. 10 of us are all working, let's say a year ago. You let that year go, and 4 of us will have disappeared. We will have moved on or separated from the job. So that's what a total separation's right there. All right, continuing on. Now, what if, again, the same principle, you let, but now they're counting how many people are moving on from the jobs. So it looks like every year we got around 50 million workers leave the job that they currently have. Well, I'll tell you what, the Great Recession really made a lot of people sick. But so here are some stats on total separations between the years 2006 and 2008, when that great recession hit. So in 2006, as many as 61% of the people leaving jobs were actually simply quitting because they were moving on to a better situation. But over here, well, let's try this thing. If you look over here, we're down way the heck down right there. Great Recession hits, and the next thing you know, people are not quitting. So in other words, the employers are really licking their chops over that situation because now they can keep people, even people who don't want to be there. And so at any rate, when that Great Recession hit, it employers were made happy because they were able to retain trained but cheap lawyer help. And again, we got to say thank you to uh, groups like National Education Summit, etc., who uh, do reports that are readily available online. And they also, let's see, we also noted lifelong learning, like this is the National Center for Educational Statistics. They tell us that if you're an American worker in this global economy, you may want to plan on a lifetime of training because the world is changing. And it's very important that we remember simply the world is constantly changing with all this technology, and so it ain't going to be the same. Anybody thinks that we're going back to the 50s, I tell you, better, you may have a drug problem, maybe you should get some counseling. So at any rate, the discussion at home continues. So the kid is wanting to know, Daddy, what's a chicken hawk? Well, maybe facts are available. Maybe I've been afraid to pursue my dreams, my own business. I've been afraid of losing the health insurance we lost anyway. Maybe parents should leave a better world to their children. Yes, of course you should. Maybe you do need universal single payer. And so, in other words, uh, people should be able to feel that there is a safety net there if a little bit of misfortune comes to their family. And I'll tell you what, as long as uh, the private insurance companies uh, control whether or not you have access to decent health care, uh, employers are going to be able to hold you out of fear. You're going to be denied the dream of, let's just say, uh, going after your own business. You know, how many people really want to start their own business? But because of the system that we have, you know, you can't do it. So we'll keep watching, and now we've got, if you remember back in 2008, or I should say 2009, actually, uh, Daddy now is, he's watching TV, and we got the Senate Finance Committee talking about with a guy named Bacchus. He's going to let us know what kind of improved, uh, well, there's going to be improvements now in the way we get our health insurance. So, good old Max here, he's a big guy with the Security Exchange Commission, like Chuck Grassley, and they both were in love with AHIP, and that's America's Health Insurance Plan. That's the for-profit group that's been making record profits for a long, long time through economic downturn after economic downturn. They keep making money, and well, what got us into all this trouble? Actually, I would say it was the Financial Modernization Act of 1999. And it was the Financial Modernization Act, 1999, that repealed Glass-Steagall, and it permitted commercial and investment banks to merge. And down here at the bottom of the screen, we've got the votes in the Senate and House that pushed this through. But I'll tell you, it was predominantly along partisan lines. Uh, I'm going to say the Republicans really pushed this through. And when they permitted uh, the merger of commercial and investment banks, it meant that your local bank no longer gave a hoot that the local businesses and local citizens did well. If you can recall, if you wanted to get a house or you wanted to get a loan for a house, the local bank would have you see a real loan officer who would want to know, or he would check out your finances, who you were, because the bank had to make sure, the local bank had to make sure that it would get paid, that it would get the money back. Well, I'll tell you what, with the coming of Graham Leach Bliley, the local bank no longer had to worry about your well-being, because they could just take whatever loans they now pushed on people and send all that paper upstairs to an investment bank that didn't give a hoot about the locals. So right there's your votes and when it happened. And by the way, Bernie Sanders, he strongly opposed that bit of nonsensical legislation that gave us, of course, the Great Recession, of 2008. So plenty of people knew what would happen if the local banks, local commercial banks, who were responsible for giving out home and business loans in your town, if they could now just send that money upstream to some investment bank, no longer would the local bank give a hoot about the locals. No longer would the local bank be there to represent your interests when governments were making decisions, etc.